is going to be just a quick trade breakdown of a setup I took this morning shortly after market open. And right now I have the S&P futures, S&P E-mini futures on the left, and the NASDAQ E-mini futures on the right, and we're on the 1 hour chart. I'm actually zoomed in on the current day, looking at a potential 1 hour setup where price has gone into an H1 or hourly imbalance, sell side imbalance, and looking to see if that's going to follow through past the external range low. You can see how that looks on both markets. It's pretty symmetrical. Prior to market open, price had already went below previous day's low, so Tuesday's low on both markets. So that's just kind of something that I do like to look out for. But I'm going to jump to the 5 minute to show you how I traded this. I actually traded away from the lows. But before I show you that, I just want you to keep in mind whenever I'm looking at an internal to external setup, I'm looking at price going into a key level. And in this case, I want to see price go below the swing low that sent us into that key level. So the lowest point before getting in here is down here. All right, so that's where I'm looking for price to go back below. But in the event that doesn't happen, I have long opportunities, and that's what I want to show you here in this video. So if I drop down to the 5 minute, I'm going to show you the London session range that I had marked out. And this is something that just the way I perceive London range, I usually draw it out between 2 to 5 a.m. That's the key times that ICT recommends for your London session in the morning. So I'm looking at that, and you can see how London session high is still intact, right? We have not went above that prior to 9:30 because the last candle I'm looking at right now in replay is 9:25. But you can see we did go below London session low, and then we went after previous day's low, and you can see that on both charts. All right, so you can see how we went below London session low at 6:30 a.m. and then we got below previous day's low shortly after 7:20 a.m. So zooming in on this, take a look at that 1 hour key level. So I'm on the 5 minute chart. You can see the candles that went inside of that area, and now I'm looking to see, will price follow through to the downside breaking this level, or will this 1 hour imbalance fail and send us higher? So I don't take any trades prior to 9:30. So the very next candle is market open. You can see that right there. Now take a look at this. You got some nice displacement on NQ heading towards that swing low. This swing low would let me know the 1 hour fair value gap is holding. Same thing on ES. When I seen these two bearish candles, I could have went on the 1 minute and started looking for a short opportunity down to that level. But here's the reason I didn't. If you look just above where I have EQH, these two highs are equal. So the high at 8:30 and the high at 9 o'clock on the dot are equal. If you look at it on NQ, you can see they are not equal, right? 8:30 is looking down on 9 a.m. on NASDAQ, but they're equal on S&P. So the high is 5,961 and 75 cents on both of those. 59.61.75. Here's the thing. From my studies, I have learned to never bet against equal highs or equal lows. The reason being is because equal highs in this case are seen as your typical textbook double top, and this is an area that's perceived as safe for retail to put their stops above in the event of a short scenario, right? So if you want to take a short, your stop goes above equal highs. This is the reason why I did not take shorts in here. After I seen this little break of structure, I chose not to get into a short position and target this old low. Instead, I wanted to see these highs be taken out first. Until these highs were taken out, I sat on the sideline. Now, even if price does just continue to melt down here and take out the lows on either market, that's completely fine. I'd rather be safe in knowing I did not get into the market before liquidity was actually hit and activated, all right? So if I hit play, you'll see that as we start to head lower, price eventually just goes down without taking out these equal highs and hits my target down here for the 1 hour. All right. During the recording, I said that I would look for a buy after taking out this low because these highs are still intact. All right. So I was willing to short only if these highs were hit first. But now that we've hit the external range liquidity, I am willing to buy. And now I have a clear area of where I can put my target because I know where the liquidity is. It's been up here since 9 a.m. Since it's still here, it hasn't moved. You know what I'm saying? So what I'm looking at now is some divergence, right? So you can see how on the left, the S&P has taken out that 1 hour low, and I'm going to draw a red line to show you that. But now if you look at it on NASDAQ, it didn't take out that low on that same level. This is divergence between these two markets. So you can see S&P is looking down on 1020, whereas NASDAQ is looking up at 1020, okay? So I'm looking at this 5-minute gap now, trying to play out. This 5-minute gap on both markets would dictate if the market was going to go lower. But now that we've taken out external range liquidity, I was looking for this to go higher. So in order for me to get that price action, I need this gap to fail. All right, here's what happened. As price develops, it goes above the swing high that we create inside of that gap. So look, this is the highest point in that gap. A break and close above this point is a buy for me and targeting these equal highs. Okay, here's what happens on the 5-minute. Right here on this last candle, not this one, this massive candle right here. You see how at one point it was a complete bullish candle with a large body all the way up here? I assumed that we would close up there, and so I ended up putting my buy right at the close as it was coming back down, thinking that we would close above this high, this swing high. Turns out we closed below it. So I actually entered prematurely because I did not want to enter the market unless we had a candle body closure above that high. So I ended up getting in a little early. My stop was right at this swing low. Not swing low, but this low right here. All right, now make that red. Now you may be wondering, why was your stop here and not at the extreme low? If I go down to the 1 minute, you can see we also had some SMT here as well. So, divergence here as well. So you can see that the 1015 candle is looking down at 1022. The 1015 candle on NASDAQ is looking up at 1022. So I was okay with putting my stop on the next 1 minute swing low, which was right here at 1029. All right, I was completely okay with my stop being there. Back on the 5 minute, with my premature entry here, my target was 2 to 1, but fortunately for me, based off of the slippage and everything, it needed to go a little bit above those equal highs where that resting liquidity would be, right? So with my stop being underneath this low and my 2R being above those equal highs, here's how that trade played out. And you can see how price went right after that resting liquidity above those equal highs and then just turned around and dropped. All right. So that was my trade for the morning. Here's the thing. Whether I press a button or not, I always record my trades. So even if I didn't take a trade, I would have had this recorded for study. But I was able to record this, and so I'll put the recording up. During the recording, I was texting on my phone and my hands hit my space bar. Something happened where I accidentally moved my position tool, but I did hit the undo button and put it back on screen. Didn't affect the trade at all because I'm actually executing on MetaTrader, but I will put that on the screen as well for you. So here's the recording from my trade this morning.